S&P 500 and NASDAQ slipping from records as traders look ahead to the May jobs report. Investors are weighing economic data amid growing hopes for interest rate cuts. For more, let's bring in Mark Baribeau, Jennison Associates Head of Global Equity. Mark, thanks for being here. So just give us big picture, first of all, as we await tomorrow's jobs report. Do you have a read on the economy that we are going to sort of like bump along here and then get cuts later this year?
Yeah, that seems to be the pace that we're moving at. You see the ADP number was a little bit slower than expected. We've seen retail sales reports that have slowed down. So I think the Fed's getting largely what it wants. Core inflation has been trending down again. So I think the market is correctly viewing rate cuts as a distinct possibility later this year.
Hey Mark, I'm interested in your take on a couple of mega caps here. Nvidia, leader of the year. It's down a little bit today, and we got that big stock split tomorrow that investors are gearing up for. Also, though, Amazon. This is a stock that's on my radar. It's right around its record highs. It was up 2% today, but it hasn't broken out yet. We've seen a lot of its cohorts do that, but it hasn't done that yet. So Nvidia and Amazon, please.
Yeah, well, Nvidia, what an amazing story, right? Their data center business was at $15 billion 2 years ago, $48 billion last year. Consensus has it above $100 billion this year. You know, never in the history of mankind have we seen a revenue ramp like that. So we're in the fourth era of computing. We're moving to generative AI. It's going to change the way computing works, the way software works, everything we do. So every big shift in a technology paradigm always has that singular leader who defines the shift, and NVIDIA is that distinct leader. So, you know, as long as the data center spending continues, not at the torrid pace, obviously, of this year and last year, but at a more normal pace the next couple of years, we think the company's going to do extremely well.
And it's interesting because there is the big question overhanging not just NVIDIA, but the whole kind of AI concept has been the sustainability of that when it comes to the growth trajectory. But it sounds like your belief, even if it doesn't continue quite at the same pace, the idea that there's still going to be growth in that area.
Oh, absolutely. I mean, look, the size of the installed base of data centers is just over $1 trillion. And you know, not all of it has to convert to quote unquote accelerated computing architectures, but most of it will over the next several years. And the company that's going to gain the lion's share of the market share is likely to be NVIDIA because of its competitive advantage in scale, software, and networking. So there's real reasons why they're the big winner so far. So you know, that's just such a large addressable market that it's hard to discount them not being successful in the next few years.
Let's talk about another large addressable market, but this time in healthcare, and we're talking about being overweight and also diabetes. We've seen Novo Nordisk, we've seen Eli Lilly surge in various fits and starts, but this seems like we're still in the opening innings here. Where do you see these companies going? Where do you see the whole movement going?
Well, I mean, the numbers are staggering. The consensus revenue estimates, I think, for Novo Nordisk, I believe, are $50 billion by 2027. And for Lilly and Nordisk, by 2030, the industry could be at $100 billion. That's the revenue estimates you see emerging now as a consensus. So these weight loss and type 2 diabetes treatment drugs are a paradigm shift, and two companies are going to largely split that market. So it's a huge, huge opportunity. And what we've seen so far is good revenue growth from both companies, but very constrained because they don't have the manufacturing capacity to keep up with demand. So the gating factor here is really supply. It's not demand. The consumer demand is off the charts. These really are consumer products. That makes them very unique in healthcare. Versus, you know, something you would take to treat high blood pressure or cancer or you know, something very serious like that. These are consumer products. So they do have enormous potential. And as manufacturing capacity comes online, you'll see revenue growth continue to accelerate. So that's the backdrop for that industry. It looks very, very healthy.
Mark, it's really interesting because I think the AI story is pretty well, if not understood, then people have certainly bid up the stocks. The weight loss thesis, pretty well understood. Where are the areas that you're seeing as sort of emergent growth, or where do you think are areas that are not as well understood right now?
Oh, there's a few. I mean, one of our favorites is if you look at what's going on in emerging markets, particularly in Latin America, is the boom in technology platforms that are addressing not just e-commerce, but financial technology. You know, there's huge unmet need in the marketplace in Latin America for low-cost credit, access to banking services, through digital banks, access to goods and services through e-commerce platforms. And so it's the technology platforms that are really delivering the goods and services. It's not coming through traditional industries. So, you know, like a Mercado Libre in Latin America is one of our favorites. Growth there is very, very robust, and momentum seems to be improving. And it's not just in their e-commerce business, it's also in their fintech business, where they do supply credit and other financial services to their e-commerce customers, to their online merchants, and to people off platform. So very, very compelling offering, and their services are throughout Latin America. Their big markets are going to be Brazil and Mexico.